Guys, it's Carter. Welcome back to the channel. Hope you guys are all having a fantastic day today. Now in today's video, we're going to be talking about how to grow that small account. This is probably one of the most common questions that I get asked on this channel is, Carter, I don't have thousands of dollars to get started. I only have $100 or $200. What's your recommendation on how to become a full-time successful trader? We're going to be looking at what I did and honestly what I did wrong. We're going to look at what I wish I would have done and everything, honestly, starting from scratch, all of that good stuff. So I hope you guys enjoy it. Smash that like button, subscribe. But if you guys want to learn more about trading, swing trading, day trading, check out our school. It's fantastic. We have private live streams, quizzes, lectures, a group chat. It's like a college class. We teach you how to find undervalued stocks. We teach you how to build that strategy. It's not a get rich quick scheme. It's not alerts or anything like that. It's honest strategies that I've learned over the past 7 years. So make sure you guys sign up. I'll see you guys in there. And let's have a quick word from today's sponsor, which is the broker that I've been using for the past 7 years. I know a lot of you are just getting started with investing, and one app that I've been using is called Moomoo. It's super beginner friendly, but still gives you pro level tools like live market data, easy to read charts, and news all in one place. And the best part, new users can get up to 60 free stocks when you open up an account with qualifying deposit. And honestly, that's actually why I tried it. And I've been using it ever since. Check out the link down below if you guys are curious. So if you guys want to sign up with Moomoo, there's a link down below and you guys can get up to 60 free stock, which is crazy amount of stocks. So click that link, sign up. I'll see you guys in there and let's dive into this. Now, this is probably one of the most common questions that I get asked on YouTube, on TikTok, and Instagram is, Carter, I only have $100. What should I do? So if you want to become a successful trader, the first thing you need to realize is a couple of things. You need to realize data. Data is so incredibly important. And what I mean by this is you probably heard those statistics of 80 or 90% of traders fail in the market. And if you actually think about it, it kind of makes sense because the barrier to entry is extremely low. All you need is to be 18 years old or older, and you can literally fund a Robinhood account today and start trading today. Compared to like any other profession, a doctor, a lawyer, an engineer, it takes years of practice, of hard work, of trial and error, of schooling, all at like so much schooling for a lot of these really, really high class professions. And traders, on the other hand, there's none. There's none. So you think of, okay, 90% fail. Well, it makes sense if you look at so many 18-year-olds are trying to day trade when they don't focus on learning for a couple of years and then building that approach. So if you're 18, 19, 20, or even older, 30, in your 30s, you got to understand that trading is doable, but you got to invest in the education. You got to focus on learning just like any other career, like a doctor, lawyer, and engineer. You got to focus on learning. Learn, whether it's signing up with my school, whether it's watching YouTube videos. You guys watching this video is taking that first step into becoming a successful trader. So the first thing I would do is focus on education. So I would consume content on YouTube. I would take courses. I would read books. I would honestly just try to learn as much as I can. After I do that, and during this time, I'm going to open up an account with Moomoo. Now, the reason I chose Moomoo is because of one, I've been using them for 7 years. I know they sponsored today's video, but I want to recommend something that I don't use. So the reason I love them is they offer something called paper trading. It's using simulated money to practice your entries, your exits, and honestly just help you build a strategy. You can build a strategy without even having to invest any money. You just need to practice. It's just like most things. So during this time, I would paper trade for about 6 months to a year of paper trading, of learning, constantly reviewing. And during this time, I'm also going to have a trading journal. Okay. So I'm going to be learning as much as I can. I'm going to be paper trading, and I'm going to have a trading journal. Now, having a trading journal is important because you can really focus on strategies that are working, because you're going to journal everything, the strategy, your approach, your checklist, everything. And I'll put a link to my journal down below where you guys can download it. It's super, super cheap, and you guys can do it on your phone and on a computer because it's through Google Drive. But More importantly, you can focus on a strategy that works well for you and really dial in on that. And I think that's what a lot of traders don't do is they try to learn so many strategies at once compared to just trying to become a master with one, right? It's better to be a master with one than average with five, right? So you got to focus on a strategy that you understand, you believe in. And don't worry, at the end of this video, we'll talk about a position that we covered with Tesla, and we'll kind of talk about why we traded it, giving you guys some kind of my checklist behind that. So, one of the most common things that I see new traders do as well is they don't understand the 3% rule. This is so incredibly important, and this is the one last thing I want to talk about before we show you guys the trade is traders don't realize that if you make 3% per month, you're in the top 5% of all traders in the entire world. So, 3% with $100 is only $3. So if you're a new trader with $100 and you make 3%, you're going to be like, oh, I'm not going to sell it. I'm only up $3. But we don't realize is the profit you make today can be used as leverage tomorrow. The compounding effect is very, very fast with trading. So you got to understand that. You got to understand, just try to learn. Okay. All right. Enough with that. Enough talking. Let's kind of talk about here the trade that we took with Tesla here. So Tesla. So the first thing I always do when it comes to swing trading here is looking at trends. And you guys can see that Tesla has a relatively upward trend, right? If we go out, it's gone from about $100 all the way up to highs at 488. Now, it did go from 488 all the way down to about 215 in that range here. So sell off for me obviously always brings opportunity, right? I think that sell off is probably one of the most important things traders get shaken out of and they don't take advantage of is because they think the end of the world's happening and they don't realize like, oh, okay, markets historically have always recovered. It's very, very hard to see the light at the end of the tunnel during those times, but it's important to note. So you guys can see that huge sell off here. And then Tesla really just started to form this nice trend line. So it pretty much hit that white line several times and just got really good buying pressure there, right? So it hits it once, twice, three times, four times, five times. So huge amount of buying pressure on it. So ideally, that's the first thing on my checklist is upward trend and support. So support could be also on like moving average lines. It could be on a variety of different things. That with this, stock, we found nice support on this trend. We also look at the RSI, which is the relative strength index. And at the time here of purchase, it was trading for about a 40, which the last time it was trading for that was back in this range where it was trading in here and we saw good buying pressure. So after that here, I always go and I look at a lower time frame like the hourly or 4-hourly chart. You guys can see that it was just forming just this general downward trend. So we threw an alert above this. So if it popped up, we would get notified for an entry point. And that's exactly what happened. The stock popped up. We got in near and around the 301 area. We kept our stop loss below 288 for a possible push up to the 359 area. Okay. So you guys can see right here. So it gave about a 4-to-1 risk and reward. And also, if we look at like the MACD, it had that nice crossover right here, which is very important. Now, with trading, it's very, very important to understand your stops with your approach. So for me and my approach when it comes to swing trading, I almost never hold a position through an earnings report. And if I do, I'm gonna limit the amount of shares I have to eliminate the risk. So that's what we did with Tesla. We did sell about 90% of our shares prior to the earnings. Now, the reason why is very, very simple is because earnings are an incredibly risky time for the stock and company. And this proves my point right here is it released earnings and the stock just got absolutely obliterated. And at the time here, we were honestly just watching this thing climb up and up and up, keeping our stop loss just below that. So we were able to cover huge profit at about the 330 area, right in that range. And it did get some huge sell-off here. This would have been a really nice short opportunity, honestly, if it was during the market day. But since it was after hours and pre-market, it was hard. But you guys can see that this thing just sold off like crazy. And this is my point of not holding through in earnings. If you look back at like previous earnings reports with most companies, it's a very risky time. You guys can see in here, we saw huge buying pressure instead of selling pressure. Back in this earnings right here, let's go ahead and see, we saw good sell off. From this one, we got huge buying pressure. From this one, huge sell off. So it's literally like a 50-50 chance of making money. And that's why being prepared is so incredibly important, is because I knew the earnings was coming. I was able to sell some shares before the earnings came out after hours. And then honestly, the reason I didn't not sell all of it is because I wanted to have some shares if this thing went up 8%, just like how it sold off 8%. I thought if it beat expectations, which I did honestly have some hope that it would, but hey, I can't predict the future. Nobody can, but we can just understand basic technical analysis and basic market history. And that's what's important. So if you're just getting started with trading, this is a simple strategy you guys can use. The broker I used is Moomoo. There's a link down below. Don't forget to sign up with our school. I'll see you guys in there. Like, follow, and I hope you guys have a great rest of your day and take care.